Celsius Holdings stock is down 70% from the all-time high it hit earlier this year. That's a massive drop. Today, we're going to dive deep into what's going wrong. Is there still any reason to be optimistic? And at the end, I'll share my take on buying this stock at its current levels. Hello, everybody. My name is Steve, and I love getting into the details of stock fundamentals, breaking down earnings, and providing clear, actionable analysis for anyone looking to invest in today's market. So if you're into that, make sure you hit the subscribe button and let's dive in. All right, let's start with what's been going wrong with Celsius Holdings and why the stock has seen such a big drop this year. First off, the third quarter of 2024 brought some major financial challenges for Celsius. They reported a significant decrease in revenue, down 31% year over year, landing at $265.7 million compared to $384.8 million in the same period last year. That's a major decline. So what happened? The main factor behind this revenue drop was something called distributor inventory optimization. Essentially, this is Celsius's largest distributor, PepsiCo, deciding to reduce their inventory levels, which meant they weren't ordering as much product from Celsius. This isn't necessarily a lack of demand from consumers, but more about streamlining distribution channels to manage stock more efficiently. Unfortunately, this optimization slashed $124 million from Celsius's quarterly revenue. In the earnings call, Celsius CEO John Feedley indicated that they're working closely with PepsiCo to better align their inventory and distribution needs. They're monitoring things like sales velocity and consumer demand more closely to prevent a similar mismatch in the future. That said, this adjustment process could still have an impact on the next quarter or two as they iron out these logistical kinks. Now let's talk about margins for a minute. Gross profit also took a hit, dropping 37% to $122.2 million for the quarter. This led to a decline in gross profit margin from 50.4% a year ago to 46% in quarter three of this year. Why the drop in profitability? One of the big reasons was increased promotional allowances and incentives given to distributors and retailers. These were designed to boost consumer interest, but they weren't balanced out by distributors' sell-in, which means fewer products were moving into distributor hands and ultimately on the store shelves. Another factor to keep in mind is Celsius' significant reliance on specific distribution partnerships. This heavy reliance means that when one of their big partners, like PepsiCo, adjusts their purchasing patterns, Celsius feels the impact heavily. And if macroeconomic factors like slowing consumer spending come into play, the result can be amplified. Right now, that's exactly what Celsius is facing. And lastly, let's talk earnings. Net income plummeted by 92% to just $6.4 million in quarter three compared to $83.9 million a year ago. This is a huge drop and signals that Celsius's profitability took a severe hit from these distributor changes and other spending adjustments. These third quarter earnings were terrible, so it makes perfect sense to me that the stock price dropped massively. Now, with all those headwinds, you might wonder, are there any reasons to still be optimistic about Celsius? Well, let's look at the positive side of the coin because there are some promising factors here. First up, consumer demand. Despite all these inventory and distribution issues, retail sales for Celsius in the US actually grew by 7.1% year over year. They've continued to add new customers, and on platforms like Amazon, they reported a 21% increase in sales. Costco sales for Celsius also grew by 15% year over year, showing that the product is still in demand and they have a loyal consumer base. Celsius is also expanding its international presence. They reported a 37% increase in international sales this quarter, largely thanks to new market entries. They've recently launched in Australia, New Zealand, and the UK and Ireland, which are promising markets. This kind of global expansion is critical because it diversifies their revenue streams. And if these markets prove successful, it could be a major growth driver in the future. They also made a big strategic move by acquiring a company called Big Beverage. Now, this is a co-packing company that Celsius was already working with, and by bringing them in-house, Celsius gains more control over their supply chain, which is a huge deal. Vertical integration like this can lead to a better cost control, more innovation, and potentially higher margins over the long run. And probably the best thing Celsius has going for it right now is their solid cash position. They're sitting on over $900 million in cash reserves, which provides them with a lot of flexibility to weather these short-term challenges. They can invest in marketing and continue product development. This strong cash reserve also puts them in a great position for promotional activities and other strategic investments as they go into 2025. Lastly, Celsius is tapping into a growing health-conscious trend. Their sugar-free, better-for-you energy drinks resonate with today's consumers who want performance and fitness-oriented options without all the sugar. This positioning aligns with a global trend toward healthier choices, which should help Celsius in both domestic and international markets. So what does this mean if you're an investor or if you're thinking about getting into Celsius stock? Let's start with the big picture. Right now, Celsius is facing some clear, tangible challenges with inventory and profitability, and the stock's drop reflects these obstacles. But on the flip side, Celsius still has a lot going for it. They're expanding internationally, increasing consumer awareness, and aligning themselves with long-term health and wellness trends that are only growing stronger. I personally think there's potential here for a turnaround, especially if they can stabilize their supply chain, leverage their strong cash position, and continue expanding their market presence. The recent acquisition of Big Beverage is promising and might set the stage for better operational control. At these levels, I decided to start a position and I'm dollar cost averaging into this stock to build up my shares over time. This allows me to take advantage of the lower price while managing risk, but I also want to be cautious. These issues won't be fixed overnight, and there is no guarantee the stock won't experience further volatility in the short term. And also, most importantly, remember, I'm not a financial advisor, and this video is for informational purposes only. Always do your own research, evaluate your own risk tolerance, and consult with a professional before making any investment decisions. If you found this breakdown helpful, please consider liking the video and subscribing to the channel for more deep dives like this. Drop a comment below with your thoughts on Celsius. Do you think it's a buy, or is this a stock to avoid right now? I'd love to hear your take. Thanks for watching, and now check out this video right here. I think you will really enjoy. Take care, and I'll see you next time.